Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on CMG SKX NKE and TWTR, heading into Wednesday, February 8th. So looking at CMG, the bulls showed up today, but pretty much the exact same candlestick, depending on the open and the close, but the upper wick rejecting from the 100-day moving average resistance. That level is just under 400 psychological. And it's an inside candlestick where we have a higher low but a lower high. The range is tightening. We're reaching an equilibrium after the big breakdown. So we're going to see a clear break. If not tomorrow, I would be very shocked if we don't see it tomorrow. That would be an extremely tight range if we didn't. But a break over 401.50, we're looking to fill the gap of 402.89, and a bear break of 395.72. We're looking down at 392 and 390 as the next supports to be watching. So the bulls proved more strength than we have seen since the reaction to earnings, but even then it was not entirely too strong with the rejection from that moving average. So the weekly time frame, we can see we're battling the middle Bollinger Band, 399.60. Bulls are trying to continue to close above that level. We've been above that support for the past month, but we're on the verge of losing it this week, and how we break from these tight candles is likely going to dictate how the rest of this week trades. So if we see a bear break of that tight range, we'll be looking to lose that middle Bollinger Band on the weekly, and if we see a bull break, we'll be looking to keep it. SKX, this has been one great bear. Increasing bear volume, red Marubozu, close at the low of the day, and the next support we're looking down at is down at 22.50 and then 22 psychological before 21.33, the low of this last consolidation. So the bear entry on the rejection from the upper Bollinger Band resistance, the breakdown and complete fall off a cliff, losing support on the weekly, lower highs and lower lows, and here we are just like that at the 200-week moving average, 22.22, approaching that level of support. So we'll be watching to see if that support can hold, but as of right now, we have not seen any sign of the bulls in quite some time, 5 days now. SKX bears in full control. So that's what we're looking for. This is pretty much the ideal scenario where we see an overall downtrend on the weekly time frame. We see a bull move. We know it did nothing to change the overall downtrend long term, so we scout bearish entries to play the momentum of the longer term trend on swing trades. NKE resistance was up at 53.26. We broke it by 2 pennies. Obviously, that's not convincing. And then we saw profit taking in a close much closer to the low of the day than towards the high. So we rejected from that middle Bollinger Band daily resistance for the second attempt. That's at 53.07. Support is 52.67 and then down to 52.05. Bears are still in control as long as that middle Bollinger Band on the daily is resistance and as long as the price keeps getting rejected. Looking at the weekly time frame, bulls are still holding on. It's not nearly as much weakness as the bears would like to see. As long as this middle Bollinger Band on the weekly is support of 51.79, the bulls do have some hope to form higher lows and continue this little bounce attempt. If we lose this middle Bollinger Band on the weekly, that will make the bears a lot more comfortable. But here's another example where we have a very clear downtrend over the past 2 years. We've been following NKE bearish since back here in early 2016. We added it to the resident bear list once we got this nice breakdown. So watching for the lower highs and lower lows to continue, but watching the middle Bollinger Band support on the weekly, which is still intact. And that daily gap still needs to be filled. No time frame on when it has to be filled, but that's a target if we keep seeing weakness, 51.33. Twitter bulls seeing some run up into earnings on Thursday, but clearly profit taking as well. And you have to keep in mind, we've seen a move now of about 5% in 5 days. So Bulls definitely going to be locking in some of that profit. People that don't want to risk a coin flip on earnings as to whether or not it's going to be bullish or bearish, they say, give me my money right now. And I'm that kind of person. I want my money. I don't want to risk giving that back on a coin flip of earnings. I want the odds in my favor. So 1867 is resistance. It's a bearish reversal inverted hammer, rejecting from the 100-day moving average of 1834, closing above the upper Bollinger Band on the daily. So we are in breakout mode, but that upper wick of profit taking would have me cautious as a bull, especially as we head into earnings, knowing the very clear downtrend that we are in on Twitter overall long term, and knowing that we will likely see some more bulls want to exit with the gains that they can from the bounce that's been going on for the past 2 weeks. Bull reaction to earnings, we're looking up at 1984. Bear reaction, we're looking down at 1616. So certainly interested to see, because we are in a pretty critical point for both the bulls and the bears on the weekly time frame, because we did have that nice bounce off of the all-time lows back in 2016, and now we gave back a lot of those gains, and this momentum on the reaction to earnings is either going to head back up towards the highs of this bounce and get that momentum back for the bulls, or confirm that the bears are still in control and head back down towards the all-time low. So that's what we're looking at tomorrow. CMG, keep an eye on that tight range, because when it breaks, we should get some nice increase in volume and volatility. And what else we got? SKX, bears in absolute full control. No sign of the bulls. Close at the low of the day on increasing bear volume. And Twitter earnings on Thursday. I appreciate you watching. We'll check back in. Have a great night.